everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take. No one trade is guaranteed to profit. I think we all understand that. So we want to manage risk on the downside in a way that makes sense for each of us. And we'll go over some ideas in that regard with some tools within our order window in our web trader. An app that make the risk management side of things quite a bit easier, calculating your exposure for you, etc. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader platform, which allows you to trade on both our MT4 and MT5 accounts from the same location. And all of the tools, everything that you see that we use in our web trader platform, the same is available in the AvaTrade app as well. Now, to enter the web trader, you just log in the upper right corner here, and then we find ourselves on the web trader platform. Now, we're going to take a look at some economic announcements coming in, not a lot of them. This week has been kind of slow in that regard, but there's some news coming in today and tomorrow that shows some good potential for predictive movements based on how the announcements come in. So we'll use the economic calendar to look at some of those ideas. And then we'll take a look maybe at some headlines that have been in the news. Just before we get into those specifics, the general sentiment so far this week has been positive on the markets with a little bit of volatility mixed in, a little bit of fear. But still the markets have been able to rise in terms of the equities, the major indices around the world. A lot of that is being attributed to the Trump effect. He had a meeting a couple days back with some of the industry leaders in AI and announced a joint venture that has begun called Stargate that has an initial $500 billion pledged investment level from OpenAI and some other industry leaders. Their CEOs spoke with President Trump a couple days ago about it, and the market really yesterday responded positively with a lot of upward movement on the equities, and obviously the tech sector and AI sector in particular was pretty bullish. Reading some articles since then, a lot of other industry leaders are pretty optimistic about the plan. In general, this Stargate joint venture idea is meant to build the U.S. infrastructure to handle a larger load on servers. So they're building server stations around the United States. They've already launched over 1 million square foot facility in Texas as the first part of that joint venture project. And they weren't 100% specific about what each of these locations will have, but basically large server capacity along with maybe their own power stations built in, own power plant type power stations to fuel the huge energy need that the chips from NVIDIA and these AI chip makers, they use a lot of energy to run these AI algorithms and such. And so this was the major announcement that really created some optimism on the markets the past couple days. Now, obviously that takes time for those projects to move forward. So the initial excitement doesn't mean that announcement will continue with causing huge bullish movements. But that's what we saw so far this week. Now, the Davos meeting kicks off today. It's a meeting of all the head economic decision makers from countries around the world, from the major economies. They'll start speaking today. I think Trump is scheduled to have a virtual meeting today where he'll speak, and so expect some volatility with that. They're not necessarily just going to talk about positive things. They might talk about challenges, things that need to be overcome, and that can create some volatility. So with all the rising that occurred, maybe we could potentially expect some pullbacks as well to try and take advantage of. But right now, the momentum seems to be pretty positive still as we move in from a sentiment perspective. So now that we can take a look with that understanding at some specific bits of information that will come in today, and maybe that already is out there today. So on the economic calendar, we can take a look at what are the major announcements today, tomorrow, that maybe have created the most predictability in terms of movement on the charts. And so this is really a nice tool if you haven't used it yet, our economic calendar. I'll set it up for today's date first. And by the way, you can filter this for the level of announcements you prefer. I leave the low-level announcements off. The ones that have more medium and high impact are the announcements I'm interested in. Makes sense because it moves the currency pairings more. And you can choose the countries you're interested in. I chose the G7, European Union, the major economy type countries. I'm interested in seeing the medium and high level announcements for, so I don't waste my time scrolling through low level announcements that I'm not interested in. So some announcements already occurred today, but if we take a look at what's upcoming, we can maybe preemptively plan what we might do depending on how the numbers come in. So the US is expected on the initial jobless claims to have a small tick up from 217,000 to 219,000. Now we're talking jobless claims. So the higher this number is, the worse the news is. So if this comes in above expectation, that's deemed to be bad news for the economy. And if it comes in below expectation, that would be deemed good news for the economy because we're talking about jobless claims. Now, this tool over here, if we click on the volatility tool for this announcement, we can pick any pairing with the US currency. Okay, I'll leave it on Euro USD. We can pick different time frames after the past announcements that we want to analyze. For now, I'll leave it on 4 hours. And I can qualify how the past events came in. You see the date for each event. We're looking back months and months of announcements for the initial jobless claims. How have the movements occurred in the past for the Euro USD after the announcement? If I qualify this and say, okay, if this came in above forecast, meaning bad news for the US, higher initial jobless claims than expected, when these have come in above forecast, 100% of the time, it only happened 3 times, but the 3 times that it happened, all 3 times, the USD weakened and the Euro climbed in the 4 hours after the numbers came in above forecast. So if the jobless claims were higher than expected, what we had was the USD weakening. That kind of makes sense if you try and rationalize that. If you're doing true data-driven trading, you don't have to rationalize it in your mind. You just follow the data. But it does make sense to me that if the jobless claims were worse than expected, meaning higher than expected, that the USD would weaken. And that's what happened 3 out of 3 times in the past. So if these numbers come in today higher than expected, you might try and find an entry point in the first, let's say, 5 minutes. And in the first 5 minutes, it's gone up as well. The USD weakened pretty much immediately, but you see only a 11 pip range movement or so in the first 5 minutes. And it doesn't take 5 minutes to place a trade. But that just makes a point that in the first 5 minutes even, it's only gone 11 pips, 12 pips. But after 4 hours, the average range movement is nearly 50 pips. Again, with the euro strengthening against the USD when the numbers came in higher than expected. Now, what if the opposite occurs? They come in better than expected, meaning less jobless claims than expected, below forecast. You see the opposite trend. 2/3 of the time, approximately, the USD strengthened, pulled the euro down. Better than expected news, lower jobless claims, USD strengthens the majority of the time in the past. And we're talking 55 or so range movement in terms of pip movement. In the first 4 hours, in the first 5 minutes, 2/3 of them actually went up. And the average range movement was only about 10 pips. So you could have caught a nice entry point on all of these, and 2/3 of the time after 4 hours, they were down significantly. And you could have a short stop in case you're on the times where it went up. But a lot more downward movement than up. And remember when it came in above forecast, the opposite. A lot more upward movement than down. Okay, so this announcement, initial jobless claims, looks like something that if I wanted to trade off of this announcement, the statistics in the past tell me that I probably have a pretty good shot of trading on the numbers after I see them. If I can catch an entry point in that first 5 minutes that I like, I already know what expectation from the past I might have in terms of how realistic is it that it might go up 40 or 50 pips or down 40 or 50 pips in the next 4 hours. Okay, so very powerful tool, and you can plan your week out over the weekend for the upcoming week each week for which announcements look like they have the strongest statistical numbers that you might want to trade on after seeing the numbers through the week. Okay, I'll pause for a moment. Any questions? And actually, I do see a question came up. And you're asking, are these trainings on your website? Yes, actually not on the website. The registration, you can register for these live sessions from our website. There's a schedule on our website with live links for registering. But to watch these sessions after the fact, they're on our YouTube channel. So this session is recorded. All of the sessions that AvaTrade presenters do, not just mine, they're all recorded, excuse me, and uploaded to our YouTube channel by the next business day. Okay, by tomorrow morning or so, mid-morning, this should be uploaded to our YouTube channel. So you can take a look at the past week's sessions, past month's sessions, and learn from the strategy concepts, even if the announcements aren't relevant anymore because they're past. But you can still watch and learn the techniques of how to use the different tools that we go over in our webinars. Very good question. Okay, so let's go and look at maybe another announcement. And what you'll see sometimes, you see these announcements are at the same time. Out of Canada, there are large, high-level announcements at the same time as the US announcement. And what you see a lot of times is the larger economy announcement tends to drown out the smaller economy announcement. So the retail sales out of Canada, which typically are at the same time as this initial jobless claims each time, they give unpredictable movements. Why? Because there's more focus on the US announcement than the Canadian announcement. When the Canadian announcements are standalone, then you see better statistical advantages for trading on them. Okay, and I think maybe there's a Friday announcement that we could look at out of Canada, but it just as an example, if I show you this Canadian announcement, which is high level, but at the same time as the US announcement, if this comes in above forecast, actually that data was missing on that one, but let's look at the year over year out of Canada. And if we look at this coming in above forecast, it's 60-40. It's as close to 50-50 as you can get with 5 announcements, 3 up, 2 down. And the same if it comes in below forecast, 3 up, 2 down. Very unpredictable. The one that went down huge, but the majority went up, but went up smaller. This data doesn't look predictable. Why is it like that? Because it's at the exact same time as the US announcement. Okay, so I would focus on the larger economy announcement, the one that maybe has the larger volume, paying attention to it, if there are announcements at the same time. But you check the statistics and you'll see. The facts don't lie, right? The facts show that the statistics were very convincing on the US announcement, and on the Canadian announcements, not so much when they're paired at the same time as the US announcement. Now, if we move forward to tomorrow, and there are other announcements out of Japan, out of Great Britain, out of the European Union. A lot of times the US announcements have the larger volume reaction. It's just the way it is many times. And so it's not that we can't look at other countries. Manufacturing data out of Germany could be a good one. We've got flash data, PMI data out of the European Union area, etc. So, here's Great Britain. It's a high-level announcement. Services, PMI, flash, and there's no other announcement at the same time. Okay, there's no other announcement at the same time. So maybe this is one that could have nice predictability. If this comes in with GBP USD as the pairing, looking 4 hours after the event, if this comes in above forecast, it only happened once, it went up. Okay, that's not a lot of data points, but what if it comes in below forecast? Has not happened. I guess most of them came in matching the forecast. Now, it looks like the data is missing on some of these announcements, which is not typical for a Trading Central. That's where this data comes from. On occasion, for some reason, some of the announcements, they don't have all the data loaded in. Typically they do, but on occasion you might see that. Maybe for announcements that are less highly traded, perhaps. If we look at existing home sales out of the US, this has been a big one. And what's nice is all of the other announcements are out of the way. There's no other announcement left for the day. Okay, so this would be the sole focus, and then there's no other announcement to mess up the movement after that. So this is a nice one at the end of the day. Sometimes it's the Canadian announcement that's last, but in this case, it's the US announcement. Let's take a look at the existing home sales month over month. There's been a big focus on the housing sector in the US with the interest rate situation. And so, if this comes in above forecast, wow, look at that predictability. 83% of the time, if the existing home sales come in better than expected, higher than expected, the USD strengthens 83% of the time. And the one time it didn't strengthen, it barely went the other way. I mean, it just barely moved. We're talking 36 pip movement after 4 hours. In the first 5 minutes, half of them maybe even went up, and the average range movement was only 6 pips. So you have time to get your trade off in the first 5 minutes, and after 4 hours, you see what the result was. USD strengthening when the home sales come in better than expected the majority of the time. So this is something I would certainly maybe put my eye on to potentially trade on. What if it comes in below forecast? Worse than expected news? Look, it's the exact opposite result. 80% of the time it goes up with only one downward movement. The rest of the movement was up. In the first 5 minutes, one went down. Average range movement, only 4 pips in the first 5 minutes. So not a quick reaction. You have 5 minutes, it only moved 4 pips, average range movement. After 4 hours, we're looking at 22 pips average range movement. So you get an idea of how far you might put your take profit, how far back you might need to put your stop loss, and the percent of the time that it might go the way you expect based on the past, right? The history is no guarantee of what will happen in the future. We all understand that, but this is how data-driven trading can work, to give you a certain percent confidence level of what you think might happen based on numbers that you get to see before you trade, okay? So just some ideas on announcements. Some weeks have stronger announcements than others. Like next week, maybe we have CPI data out of the US, or some weeks we have the non-farm payroll announcement out of the US, or maybe we've got GBP data out of Great Britain or the European Union, etc. So you can, over the weekend coming up, pick out the announcements for the next week and analyze the past movements based on how they came in the past, and write down your schedule for announcement trading for the week. Okay, trust me, each week there's at least 5 or 10 that interest me, that look like that 75, 80% certainty level from the past. And then you see if over a month or two of trading in this sort of style, what are your results? Do small risk. You don't have to do a large risk if you don't want to. Small exposure amount to test what type of win percentage will you have with this strategy concept. And it would only have to be one strategy concept that you do, just one that's in your tool bag of ways that you trade. Okay, so that's one concept with our fundamental analysis tools on our web trader, and by the way, it's in our app as well, that you can use as one strategy to trade. Now we can look at another. So within the platform, without ever having to leave, you don't have to go to a bunch of websites to find news to see what's the latest headlines. It's very simple just to go to our Market Buzz and put any instrument you want and find what's the latest news. So besides trading on economic announcements, okay, we've gone over that strategy. Now we can go a second strategy you can use each day, and you can check in the morning, in the afternoon, in the evening. What are the latest news articles on whatever's trending the most? Okay, Netflix is trending the most. It's the biggest circle in the pictogram. It tells you how many mentions it's found online, 584. So let's see, well, what's happening with Netflix? What's the big deal? So let's click, because a lot of times it's NVIDIA that's trending the most, or Google, or Microsoft. Today it's Netflix. So let's see, why is Netflix trending so much? So we click on it. First of all, what we'll see is many times these instruments have a signal, a movement prediction from Trading Central in this area, and it may load here. Sometimes it takes a second to load. So in this area, sometimes you'll see that they're predicting that it'll rise or it'll fall a certain percent, but the news is over here, and here it did load. So price may rise 12.5%. Okay, that's a technical prediction. So you can get your technical signal here in the market buzz. The expectation is that the price, as long as it stays above the support level, which is this blue line, that's what they call the pivot line. As long as the price stays above this line here, they think that the price will rise towards the green take profit zone up here. That's the signal. You can read right here. It says our preference, next target stands at 1,073. It tells you the alternate scenario. If it does drop below the pivot line, then it tells you to expect further dropping. Explanation of which technical indicators were used, the key price levels that were found, everything's there for the technical analysis. Okay, so the technical signal is buy, unless it drops below that pivot line, which would establish a downtrend from a technical perspective. So now we can read the news and see, is the fundamental news also on the side of buying? We already know there's optimism because of the Trump effect with his announcement about this big joint venture for a huge AI infrastructure project and a lot of funding that's going to go into that. That maybe that doesn't affect a company like Netflix as it might NVIDIA, but pretty much all companies are in one way or another being affected by AI eventually. Now, what we look at here then also, what's specific to Netflix is out there. It's interesting that Netflix price target has been raised to 960. That's a bullish bit of news, that the price target has been raised. You can click on that and read the whole story. Well, why did they raise it? Okay, so you can read the whole article and decide for yourself if that news sways you one way or the other. Okay, any other news about Netflix, we're going to find it here. Someone else Wells Fargo raised their Netflix price target to even higher, 1,210. So not just 960, but Wells Fargo says they think it'll rise to 1,210. Okay, this all sounds bullish from a fundamental standpoint, and the signal is bullish. So now you start to maybe be more certain about the fundamental news matching the technical signal. And so maybe when the US market opens and Netflix becomes tradable on the chart, if you like the entry point, then maybe you make that move. And you're doing it from an informed perspective, both technically and fundamentally, thanks to these tools. I saw other news. They actually had good earnings. You see here, Netflix hits new 52-week high after strong earnings. So now we start to understand fundamentally, why is everyone bullish on Netflix? Well, why are their price targets being raised? They recently had high earnings. Their earnings numbers came out, earnings per share, revenue for the past quarter, stronger than expected. If you want to read about that, click the link. You can go to the whole article. So now, in a short period of time, you've been able to learn a lot about Netflix in this case, okay, in 10 or 15 minutes, or even less. Now I'm pretty much set that I'm pretty positive on Netflix right now, maybe. Maybe I want to read an article or two more to convince myself. And then now I know when the US market comes open, I'll check out Netflix. Maybe I'll put a price reminder or something on my calendar to remind me to, when the US market opens, hey, let me check the Netflix opening price. Okay, very, very simple to have multiple strategies with fundamental news built in without ever having to leave our app or our web trade, and still trade directly from this location on your MT4 and MT5 accounts. Okay, but with all of these advanced tools. Let me take a second. I see some more questions were popped up. Okay, Olabisi, you're asking how useful are the signals? I think I answered your question maybe just now. We just used a signal in unison with the fundamental news. And so how useful are the signals? For me, the signals make it faster to see the technical analysis. Here, I'll click on another signal. You see, the technical analysis is done for you in the signal. It gives you a pivot line, which is a support level, and it tells you where to expect to find support on a sell, where you might think about take profit, or where to expect resistance on a buy to take profit on a buy. Here's the pivot level. So it does the technical analysis for you and tells you what the technical trend is. In this case, sell on the Euro GBP, for example, which is what I clicked on here in terms of this live signal. So the signals I find very useful. I don't use them as a standalone tool, but as part of a strategy as I analyze the fundamental analysis like we just did. And then I look at the signal to see, does the signal agree with the fundamental news? And let me take advantage of the time that Trading Central took to outline the support levels and resistance levels in that signal, so I can use their backwork to use that technical analysis as another part of my strategy without having to draw those lines myself on the chart. It's already been done with support and resistance levels within the signal. Some people trade just off the signals. I think you'll find maybe a higher success rate if you use the signal in unison with additional information from the fundamental side. And that way you're selectively using signals that you think also align with the current fundamental headwinds. Okay, very good question. Okay, and by the way, Adam, you're asking, is that technical analysis? Yeah, the technical analysis is within the signal. And by the way, I do a technical analysis webinar on Wednesday evenings. So 6 p.m. UK time, which was last night. Unfortunately, my web trader froze. I had an internet issue or PC issue, one or the other, that froze up my screen last night. I checked, we didn't have a central problem, so it was only me. But my technical analysis webinar is on Wednesday evening, 6 p.m. UK time. Anyone who was in last night's session, I apologize for the technical issue I had. Okay, so I don't see any further questions. So let's go ahead and we'll take a look maybe at some other ideas. By the way, there's a news feed here too. So besides going to the market buzz like we did here, we could just go up here and here's a news, where's the news feed? Here, see it says news. If I click on that, okay, you can pick different ideas, European market brief, Asian, a pre-Asian market brief, US market brief, and read a summary of announcements that have come in, big headlines that have occurred, and then any instruments that might be related to this news are down below, okay? Things that you might want to trade on based on this news. You can trade on other things as well. You read the news, and if it sways you one way or the other, then you can bring up any chart you want, really. There are some that are suggested, but you don't have to trade on those exact instruments off of this news, but they're likely related to it. That's why they're listed there. But this is another way to find information in a summarized version. I like to look at the live announcements as they come in, but also it's good to look at summaries of information for different regions as well, okay? And that can be useful. It's another option for fundamental news. But what I want to do now is maybe take a look at some live movements and see, besides the fact that when those announcements come, you can trade on those specific currency pairings. And also you can start to look in the market buzz. I looked at a US stock, so we couldn't set up a trade on that yet on Netflix. If we looked at a European stock or gold in the market buzz, those are tradable right now. So if we saw news and a signal that was relevant, then we could simulate a trade right now. But let's look at something like gold. And we could think about the general fundamental news situation if we want, and decide, is that something we might want to trade on? So sometimes, even without specific information, I've looked at the headlines, I've looked at the announcements. Okay, I think I have a general understanding of what's happening right now. I know that the Davos conference is starting today, and that can create some stress, some some volatility on the markets. And so maybe gold as a safe haven right now might make sense to you as it goes into that large meeting. Okay, and we can start to look at one-day candles on gold and see where's the next resistance level on gold. Okay, and I've already drawn in the past webinars a resistance up here at the all-time high. So all-time highs are around 27.93 or so. We're at 27.53, so it's $40 an ounce to the all-time high, approximately. This looks like an uptrend on the one-day candles. And if I want to drag one of these lines, I can see here was the last resistance level on the one-day candles. Resistance, resistance, resistance on the one-day candles here. No other resistance, and look what we broke through today. We just went above that resistance level. So we're free sailing on the one-day candles until we get up here pretty much for any significant resistance level. Okay, that's the technical breakdown there. The fundamental idea that I'm thinking about right now is the Davos meetings, they create a lot of volatility sometimes. And so gold being a safe haven could be something that people might rush back into right now. So let me refresh the screen. Gold is trying to load on my screen. I just refreshed the whole platform, so we might need to bring gold back up. I'm starting to think maybe I should replace the laptop we use here for the webinars, because I don't have this issue from my other office location. Okay, and so now we have gold. Here's the one-day candle resistance that I just drew. When we're on the one-day candles, I showed that there was resistance in the past, and that just in the past day or so, we've broken above that resistance. It dipped back below, but here it is right back above that resistance. Okay, so this seems to be a support level now that we've broken above, so it may act as support moving forward. And it seems that as soon as it went below, it came right back above. So something's driving gold to be above this level, at least right now, from a technical perspective. Fundamentally, because I just feel like there could be volatility. Even as the market was rising yesterday, the volatility index was actually up. Usually when markets are rising towards all-time highs, the volatility index is down. But actually, the volatility index was up through the whole thing, and it's up a bit today as well. So there's maybe a few reasons why you might expect gold to be bullish. And if that was the case, then let's show how easy it is to risk manage here. Okay, we're taking a fundamental view of gold that maybe there's reason for it to rise. Yeah, there's also fear about the threats from Trump on China for tariffs. There's threats from Trump on tariffs for Russia now because of the Ukraine war. So there's multiple reasons why gold might have a safe haven bullish move, okay, potentially. And maybe I'm going to use a unique way to protect my risk by using AvaProtect. Okay, let's get through today, tomorrow, the weekend, and all the way to Monday with AvaProtect. Two days protection, if it lets me. Okay, 2 days protection. Maybe I want to risk only about 1% on the cost of the protection, so around 550. So if I do one lot trade, that costs me 1,300. If I do half a lot, or maybe 0.4, okay, 539. That's less than 1% cost on my balance. But with the huge event starting up in Davos and the stress about tariffs on China and maybe tariffs on Russia, who knows what might happen through the weekend or what Trump might say, right? So maybe there's a huge potential for some fear to hit, fundamentally speaking, for multiple reasons. And so maybe you have the view that gold might be bullish and head towards the all-time high. So the all-time high was about $50 up, right? We said 27 or $40 up, 27.93, something like that. So if I wanted to program a take profit near the all-time high, 27.93, Okay, that's over $1,500 profit. And my protection with 2 days is about a third of that. So if I win 1 out of 3 tries, I would break even. If I had 33% success, hopefully I'm right more often than 33%. But to that all-time high, without even having to break the all-time high, I'm making about 3 to 1 potential profit compared to the cost of the protection. Okay, so easy to risk manage and know my potential profit. And with using AvaProtect, I can be patient now with this trade and wait, even if it goes the wrong way initially. I don't have to have a stop loss programmed if I don't want. I can be patient for a couple days, because with the protection, any losses when the protection ends are added back. So as the protection time ticks down, and I can go to the information here, okay, it shows me how much time I have left on my protection. Okay, expiration of my protection shows me that 99 hours and 22 minutes. It's 2 business days, which is Thursday to Friday and Friday to Monday. So we get a bonus here that we get to actually carry this protected trade all the way through the weekend when we enact a 2-day protection from Thursday. So my expiration day and time is here, the 27th at 5 p.m. Okay, and that'll be in your local time. Okay, so as this ticks down closer to the protection expiring, if I haven't hit my take profit yet, then maybe I'll add a stop loss. Okay, and I can edit the position at any time to go and add a stop loss if I want. Okay, I won't do that yet because I don't want to take a loss on a stop loss and then I make that back with the protection. But why would I want to give up on the trade so soon if it went down and spiked down right now and hit a stop loss? So I won't add a stop loss till the protection's almost over if it hasn't already hit the take profit. What this protection allows me to do is be patient even if it runs the wrong way initially. I don't have to worry about it. If it went down so far that it stopped me out, I would get all those losses back. And I'd be made whole again except for the cost of the protection, which I made sure was only little less than 1% of my balance for the cost of the protection. But my potential profit could be much more. Okay, just a unique way to trade based on, in this case, a fundamental news macroeconomic view, not on a single announcement that occurred right now. So this was more of a macroeconomic trade, fundamentally speaking, of how I might feel about a safe haven like gold right now with the current fundamental news situation. And then I can be patient with that. It's not an exact entry point necessarily that I need with this type of trade. And so I'm putting AvaProtect to trade in a unique way. Now, with those announcements from the economic calendar that we looked at, I'm probably not using AvaProtect. I'm using a stop loss because we analyzed the exact expected range movement from the economic calendar announcements that happened in the past. So I already know how far I might want my stop loss, and that's more of a short-term trade. We're looking at 4-hour window on that economic calendar for that data. And so those are shorter-term trades. I'm probably not going to pay for AvaProtect in that situation. Although you can pay for AvaProtect by the hour if you want. I could do maybe 4 hours or 6 hours protection of AvaProtect with the economic calendar announcements as well. It's up to you how you would want to handle that side of things with the risk management, but you have those options there. And so we've gone through 3 ideas for fundamental news trading. One is economic calendar. The other was the market buzz with economic announcements paired with the signals. And a third is if you just have an overall feel in terms of sentiment for a particular instrument based on the totality of the news as you've looked at it, then you might make a gut feeling type trade like I'm doing on gold, but in a smart way, managing your risk maybe with something like AvaProtect. Okay, so 3 different strategies you could trade on in those 3 different ways at the same time. And so you're diversifying not just the instruments you're trading on, but also the strategy that you're using, so that if one strategy is not working, you don't have all your trades just on that strategy. 2, 3 different strategies, risk managed and trading at the same time. Okay. All right, everybody, if you don't have any further questions, I think this is a good spot to stop. Take a look at those announcements today and tomorrow that are coming in. I think they could be useful from the economic calendar strategy concepts that we went over. And maybe keep an eye on Netflix, some others if you go into the market buzz like we did, and see if you like the entry points after studying the most recent news on them from the market buzz. It really can be a powerful strategy tool for you. All right, everybody, thank you for joining. Bye for now.